Hey everyone, this is Dan with Data Trend. Today is Friday, February 19th, 2016. It's about 2:20 p.m. or so Mountain Time. The market's closed 15 minutes ago. We are looking at a weekly chart of the Russell 2000 right now where they decided to print a green candle this week. The market ended up here at about 1010 and some change. Up 0.53% on the day and about 3.8% or so on the week, something like that. And it's important to point out here that we just kind of ended the week right around this area that was prior resistance and also prior support. And it's not necessarily real significant because we're going back a couple of years, but it does seem like the market encountered a little bit of slowing in the uptrend here when it got to around that 1016 level. And that's a level that we've been watching on the shorter term time frames as well, and we just haven't been able to get back up and above it. If we drop down to the daily chart, at the same time that I prefer to be bearish, there is some constructive price action. The market was able to hold here up above the 20-day simple moving average for a couple of days now. We have a couple of really small candles in here, especially relative to what we saw earlier in the week and late last week. But we do see some constructive signs. If we look at this is implied volatility is the green line, 20-day historical volatility is the purple, and this is essentially 1 year is the blue. And we've seen just this steady rise in both implied and 20-day historical volatility over the course of the year, and even actually starting later in 2015. And today, at the close or close to the end of the day here, we just saw implied volatility really come off pretty hard, and it's been just collapsing here in the past couple of days, really, since we saw that turn down here at that 942 level in the Russell. So that just sort of serves as confirmation that there's not immediate downside fear, at least in the options market. It may or may not be right. We do see the 10-day simple moving average starting to tick higher here, turn higher and move up. But it's always a steady progression. I mean, it takes the market a while to heal down at these levels usually before it can make a bigger rally up higher. And certainly we don't know what's going to happen next week. The market could just as easily go lower as it could go higher. The yellow lines here are the expiration break evens for the March CIB as it sits. Right now, approximately, actually this may be yesterday. I did make an adjustment to the position today, so I'll need to update these for the weekend commentary. But as it sits right now, or as it sat yesterday, they were down around 946 and up at 1025. They're slightly different, and we'll look at the position here in just a moment. If we drop down to the 65-minute time frame, yesterday we were talking a lot about this 1,000 level, and I said that the market it's kind of a key level here, this 1,000 level. When we were looking at the futures, that 1,000 corresponded approximately to the we don't want wheat. Corresponded to the week-to-date volume-weighted average price. And what we did see today is we saw the market come down here, and it kind of fell through the volume-weighted average price, but it really wasn't able to hold that level, and it staged a big rally back up and from there. And so this 1,000-ish level did act as support. This is the rising 5-day moving average now. So the market's been more validated on the upside than on the downside at this point. If the market fails to hold kind of this 1,000 and especially this 995 level into next week, then maybe we could see a little bit of a deeper pullback, hopefully down towards a 10-day moving average, which is down around this 980, 985 area, something like that. And it's also interesting to note that 985 corresponds to last week's week-to-date volume-weighted average price. So certainly if the market was to break through here, we'd expect to see some slowing as it comes into this 985, 980 area. But we'll just have to wait and see what happens. Let's go back over to the RUT here. So on the Russell 2000 chart, the big levels that we're watching are kind of up here around 1016 to 1020. If the market can get up and above this level, we'd expect to see it come up here at least to test the upper side of this box, which is around 1035. And we haven't seen it do that yet. Today it was able to hold this 1,000 level that we thought would be a key level, and it did. And if it comes down there again next week, that level is also going to correspond with about that 5-day simple moving average. And so a pullback down from there to that 983 level is both the lower side of the box and the 10-day simple moving average. So there are a lot of reasons that we might see the market at least initially try to find support down here around 980 to 985, say, something like that. So if we keep those levels in mind, let's hop over and take a look at the position. This is the position as it sits at the close today. And the adjustment that I made to the trade was a reverse Harvey, and I did tweet that out earlier this morning. And what I did is I moved the 1050 upper long put. So we had an upper long put up here at 1050. I moved that down to 1040. and I knocked in the lower from 900 to 910, and so that just sort of choked up the risk graph and flattened out the T+0 line and put the trade in a little safer position to make it through the weekend. So again, we have the price slices here, the market closing at 1010. If the market was to gap 1.2% higher, it's going to take us right to the edge of the body of the butterfly. Basically, we're going to have to do something at that point, and we'll have to think about what that is. I do have one idea, and I'll show you that here in just a moment. If the market was to gap 3% lower, it would take us down to about 979, 980-ish. And at that point, we're definitely in a great spot. We're right in the middle of the body of the butterfly, and we could do something here to either protect profits or even look to take some profits off the table. So as we went into the weekend, the delta is negative 1430, the gamma is negative 0.27, theta is just under $50 a day, Vegas negative 83.96, and the open profit on the trade now is about 117 and some change. So we're sitting right here. We're in an okay part of the butterfly. We're right in the front. The biggest concern would be a really fast move lower or a really large gap higher. Certainly anything is possible, but I think that we're in a relatively safe spot here, at least for the time being, enough so to go into the weekend. And we know that we have that resistance or potential resistance up here right around that 1016-ish level. So in the case that we do see the market get up here to 1016 and seem like maybe it wants to push higher, there are going to be two concerns. One concern is going to be if it gets up here, maybe it just pushes a little bit higher and fails, as though it's trying to suck in some longs and trap them here, and maybe it finds resistance at 1025 and fails and falls back. And so that's one concern. And then the other concern is that it really does make it up to this 1035 level and continue up higher from there. And it's difficult to say what will happen. The first thing that we probably do is if the market gets up here, say to this 1016 level, we're going to be starting to get close to the upper expiration break even. And the best thing to do, I think, in that case is going to be to take off the lowest butterfly in this trade. So there was originally a butterfly centered down here at 955, and over the life of this trade, it's sort of morphed. And what it is now is it's made up of the 910, 955, and then one of the 955s was rolled up to 965, and then the 1010 is the upper long. So price closed here, basically sitting right on the upper long of the lowest butterfly that's down here at 955. And so if we do see some continuation in the move higher, we'd probably just go ahead and sell this out as a condor, and it would do that to the position. So just move this down. And so you can see if we were to do that, that moves the expiration break even up here to about 1025 or so. At this point in the trade, we're not taking heat. And we have room to move really all the way up to that 1030-ish level. I mean, really even could take it all the way to 1035 if we really wanted to, just to make the market really prove itself. And if it does decide to pull back, you know, the lower side of that box is down around 983, so that's somewhere in this neighborhood tier. So if we have some relatively normal moves, quote unquote, next week, the trade should be relatively safe. But if we do see a push higher up into that 1015-ish level, this is going to be the adjustment I think that makes sense to make, just because it protects us on the upside. If we weren't to do that and the market moved up here to 1025, 1030, we're starting to get drawn down money. You can see the open loss at that level is about negative $200, negative $150 or something. You know, this trade is 27 days to expiration now, so it's coming into the money relatively quickly. The theta's high, but it has been really a tough month. We have struggled. You know, we've chased the market lower, chased the market higher, chased the market lower, and now we're chasing it higher again, maybe. I'm not really sure, but you know, we have an open profit in the position, which is great. We're sitting in the trade. The T+0 line is relatively safe, and for the time being, things are good, and we still have options, you know, like this. So that's all I have for tonight. I hope you had a good week and have a good weekend. And thanks for watching. If you have any questions, feel free to shoot me an email, info@thetatrend.com.